Short-term versus long-term business loans, which one is right for you? Well, the answer is probably both, depending on what you're looking to do in your business. And in this training, we're going to talk about both. We're going to decode both of them right now. You're going to see the benefits of short-term loans, the benefit of long-term loans, when you really should use them, which ones are easier to get, and which ones may work for you right now. We got a lot to cover, so let's dive in. All right, so let's dive into short-term loans first. The first thing to know about short-term loans is they are on a shorter term. I know, surprise, surprise, right? But what do we mean by shorter terms? Well, a lot of these are like revenue lending or merchant cash advances. The term can be as little as 3 months, and they're oftentimes 6 to 12 months. Now, in the short-term category, we also see financing up to about 2 to 3 years. So that's the first thing to know is that short-term loans typically give you a term from 3 months up to 3 years, depending on multiple different risk factors like your time in business, your credit score, how you manage your bank account, etc. So the second thing to know about short-term loans is interest. These are way more expensive than what you're going to find with long-term loans. Now, the good news is they're way easier to qualify for, meaning that they'll take into account the fact that you're a newer business and that you have really bad credit, or the fact that you're not managing your bank account responsibly. These risk factors that would get you denied for longer-term loans are still acceptable for you to be able to get short-term loans. So they're easier to get, but at the exact same time, you're going to pay more money for them. The interest is higher on these because the bank has to make their money back in a shorter period of time versus make their money back over a long period of time like we see with long-term loans. So shorter terms are going to give you a lower payment term. They're going to give you higher interest, which means your payments are typically higher on short-term loans than what you're going to find with long-term. And that brings me into the third and final factor of these type of loans, how you actually use the money. Look, if you're in a seasonal business, short-term loans are not for you. They're not meant for somebody trying to get through a slow season for the business or just to have money laying around. Short-term loans are more invented for you using the money and investing the money to get a return fairly quickly. So let me give you an example. Let's say I'm running a Facebook ad campaign and I'm having some success. I'm spending $25 a day, $50 a day, $75 a day. It's working. I'm getting my return on investment. Now I want to spend even more money. Well, this is a really good opportunity for short-term loan. It's easy to get. It's fast to get. I can get my funding in 72 hours. I can put the money into that, start scaling up the Facebook ad campaign, make sure that my return on investment is consistent, and the money I'm making on profit on those ads, I can quickly use to start paying the new loan payment. This is a perfect example. Now, another example may be that maybe you're bringing something in-house. Maybe you're acquiring a company. Maybe you're bringing part of it, something that usually outsource inside, and that's going to radically increase your margins. So these are examples of where you're able to take the money, invest it into something, and get a pretty fast return, and that return is enough to pay the payments on the actual financing you're getting. So for example, with Credit Suite, the very first loan we ever got was a short-term loan, and we used it to launch a call campaign, to open up a new office, and to start running digital ads. Now, like many businesses, only 2 of those were successful for us. The third one failed completely, but we got our ROI very quickly and we were able to get considerably more in profit than we were paying on that loan, so it made sense for us to get that kind of financing. Now, does that make sense, or does long-term make sense for you? Well, let's take a look at the comparison between long-term loans. So long-term loans are typically 10 years, 20 years, even 30 years longer. So the nice thing about this is it keeps your payments very low, and that allows you to borrow considerably more money. Let me give you a comparison. I talked to you about the first loan Credit Suite got. It was $75,000, and our payment was about $9,000 a month on a short-term loan. Now, the second loan we got was $250,000 more. It was actually $325,000, and our payment was only about $4,600 a month. What? We got $250,000 more in financing and had half the payment that we did when we only borrowed $75,000. That's what term will do for you. When it comes to financing, term matters way more than interest. So you always want to get the longest term financing you can get. And term loans and loans like SBA, these offer you these 10 to 30 year terms, keeping your payments very low. And the benefit is it allows you to borrow a lot more money while keeping very low affordable payments. Now, the second part of this is interest. You're typically going to find lower interest on these kind of loans than you will find with long-term loans. Look, long-term loans, you may pay 20, 30% or more in interest. On short short-term loans, you're typically lower than 10% depending on where the prime interest rate is, right? If the Fed keeps raising rates, you may pay 8, 10, 12%. But if the rates are down where they typically are, you may pay only 3, 4, 5, 6% interest. So again, this combination of long-term and low interest helps you borrow a lot more money while keeping your payments low. Now you're going to use this kind of money for just about anything. Because your payments are so low, you can get these kind of loans just to have the money available, even if you're not directly using the money for anything now. You can use it because oftentimes the loan amounts are larger for acquisition of businesses, for acquisition of different parts of your business that you want to bring inside. You can use this for major marketing campaigns. You can use this for working capital to cover a lot of your expenses, major expansion. So again, the loan amounts are typically higher and the payments are low. So it allows you to use this money for just about anything, even if you're just getting the money to have it laying around for a rainy day. All right, so here's some considerations to think about then to determining between these two. First of all, how urgently do you need the money? Look, long-term loans take time to get. Sometimes these SBA loans might take 1 to 3 months or sometimes even more to be able to close. Short-term loans, you can typically get 72 hours or less. Yeah, that's a real thing. In less than a week, you can have the money in your bank account. So how fast do you need the money? Definitely a consideration for which type of loan you get. The rest is your risk tolerance, right? Some people really get freaked out by paying higher interest. For me, I don't mind higher interest. Higher interest typically means higher risk, meaning that if you pay higher interest, it means that you're typically getting a loan you might not have got 10 years ago because the lender's more willing to deal with your risk. So I find that higher risk means that more people are able to get approved, but you need to decide. You might not want to pay high interest, high payments for a short period of time. You need to determine your own risk tolerance to see if short-term loans are even a viable option for you. The other consideration is the cost of capital. So you've got to look at how much the money is going to cost you, what you're going to use the money for to make sure that it's worth it. Like I said, if you're getting a really high ROI on what you're doing, then it probably makes sense to just pay the higher interest, especially since a lot of that interest is tax deductible anyways. So let me give you an example. So I actually saw a client pay as high as 65% interest on equipment financing. That's outrageous. But here's the deal. Even when it was said and done, he still saved $10,000 a month because the people he was manually paying to do that work, the piece of equipment was $10,000 cheaper than paying all those people to do the work. So that's what you have to look at is, does it make sense? It oftentimes makes sense depending on how much ROI you get from that investment. If the money that you're actually getting gives you a way higher return on what you're spending it for than the cost of borrowing it, then it probably makes sense for you. But then the last piece is your business goals. What are your business goals? Because realistically, you can use short-term and long-term loans to fit within those goals perfectly, meaning that you probably have a place in your business, as Credit Suite does, for you to actually work with both types of loans. Sometimes there's money you want to get really quickly and invest and get a high rate of return. Sometimes there's money you want to get higher loan amounts and just have it sitting around for a rainy day. Using both of these vehicles, short and long-term loans, is the best option for you to monetize all the capital available to be able to grow faster. Do you want to know the kind of short-term loans and long-term loans that are available for you right now? Well, there's 2 steps you should take. First of all, grab our free guide on 27 killer ways to get the money you need to grow your business. That's at creditsuite.com/27. Also, schedule a finance assessment with our team. Our team will actually sit with you and tell you all the funding you can get right now. Look, a lot of business owners think they can't qualify for any financing. Then they do a finance assessment with our team and find out there's multiple different types of loans they can qualify for. So make sure you go to creditsuite.com/consult to schedule your free assessment right now. Did you get value from this training? If so, make sure you like and subscribe to keep your eye out for our next training. We're talking about more cool ways to get the money you need to start and grow your business.